Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, stable for the markets except for the fact that HDFC is turning out to really be a star stock of the day. We've been talking about how other stocks from the financial space are in focus. Muthoot Capital Services, that stock too is just about running away. Almost 800 rupees for that one. It's up 17.5% and maybe we'll get Abhishek to talk about it and revisit the numbers as well for us. But besides that, maybe the other stocks, something like Capital First should come up for you, as well as IDFC Bank. But what really seems to have taken the attention away from those two stocks has to be HDFC and the kind of moves that we're seeing on that one. Separately, let's talk about a couple of other stocks in focus. So Idea Cellular from the broader markets is a bit sluggish. That stock is down around 2% odd. A couple of these defensives are giving way. So something like Divi's Labs is down around 1.7% at this point in time as well. And from the Nifty space, Eicher Motors is your top loser, down around 1.6% as we speak. Even Sun Pharma a bit sluggish at this point, down 0.2%. But let's get in some market opinion then. Abhay Lajewala, head of India research at Deutsche Equities, says economics and earnings growth will return this year. We'll be back.
I think the key theme for this year is the expectation of growth returning. I think that was not there last year. So clearly that is what is driving the markets. So we do think that both economic growth as well as earnings growth is set to recover strongly this year. For FY19, which is what the market is now beginning to look at and what the market will react to, we are expecting 22% earnings growth. Even as far as FY18 is concerned, while FY18 earnings estimates are unlikely to be met in terms of the consensus estimates, we do think that we are exiting calendar year 2017 and going into 2018 very positively. We have four key themes for investors this year, and almost all those themes are domestic focused. So the four key themes that we have are rural reflation. We have high growth, high CASA banks as a theme. We have pre-election year focus on infrastructure, affordable housing and tourism as a theme, and we have digitization as a theme. So as you see, based on all these four themes, the common thread is growth.
All right, Abhay Lajewala, with his views on both the market and the macros. CNBC TV18 told you first, and now it is confirmed. IDFC Bank will merge with Capital First at a fixed share swap ratio of 139:10. Nisha has been tracking that story. We broke that story late last week. Let's revisit it with the contours and what it will mean for the combined entity. Nisha, over to you.
Mega merger we first reported about, and now it's a done deal. IDFC Bank to merge Capital First with itself, and the swap ratio is going to be for every Capital First share held, 13.9 shares of IDFC Bank will be issued. Now this is very critical. That's something that the market will have to react to. Whether or not it's too expensive and too dilutive for IDFC Bank shareholders is to be seen. Another very important point and a critical important bit of this particular merger is the management change. V. Vaidyanathan, who heads Capital First, who has grown that NBFC from scratch, from ICICI Bank lineage, is now going to be the MD and CEO of the merged entity IDFC Bank as well as Capital First. That's something that the market should take very, very positively. Dr. Lal would be elevated to the position of non-executive chairman of the bank. Now remember that the synergistic benefits of retail footprint coming in to IDFC Bank and the corporate book, and also giving that banking experience to Capital First as an NBFC, are the most important rationales because of this transaction has really happened. But management change is something that both IDFC Bank and IDFC Limited shareholders would be reacting to for sure.
Okay, absolutely, Nisha. Thanks very much for that. In fact, most of the brokerages have said that it is, in fact, a win-win proposition for both of the entities, whereas Capital First will get that retail, or rather the banking license, and IDFC will get that retail portfolio. We'll take a break, but before that, we're getting some exclusive details with regards to Warburg's I think their holding in Capital First, and RBI rules restrict the holding of one entity in a bank to 5%. One entity may hold 5 to 10% in the bank with RBI permission. So I'm sure there will have to be some restructuring in terms of the shareholding pattern of the consolidated entity. IDFC stake may fall to around 38% in IDFC Bank after the Capital First merger, and IDFC may have to buy shares in the market to retain 40% in IDFC Bank. We're going to get Lata to talk about this. Warburg, in fact, may seek RBI nod to keep close to 10% in IDFC Bank post the merger. So there will be that RBI nod which will be needed for Warburg Pincus to hold stake. Remember, they have shed off stake in the past in Capital First, but in terms of the merged entity, they will need some RBI permission in order to hold 10% or retain 10% stake in the merged entity. We'll have Lata with us in just a couple of seconds, but this will be important news to track at this point. I think Lata is with us now. Lata, hi, over to you.
Yeah, these are some of the regulatory creases that everybody was expecting. Not that this comes as a major shock, but IDFC, there was a bit of a grey area on whether they have to hold till 40% till 2018 September. That's, I think, 3 years since you get your license. You have to show your commitment and stay put with 40%. So people were not very sure whether you can reduce it before that. It appears from RBI, sources close to RBI or sources who were in RBI, ex-RBI officials, that you have to have 40% till September. So IDFC may have to buy stake from the market to ensure that its stake in the merged entity doesn't fall below 40%. It may be a small, less than 2%, but that much will have to be bought. And the second point would be in terms of Warburg stake in the merged entity. At the moment, 36. So when it comes down, it will be a little more than 10%. So a little bit will definitely have to be sold, since no entity can hold more than 10. But actually, the RBI rules are no entity can hold more than 5% in a bank. But with RBI permission, you can hold between 5 and 10%. So if RBI gives approval, Warburg can stay up to 9.99, in which case they have to sell a very, very small percentage of their stake in the merged entity. But that permission has to come. So those are the two things in terms of RBI circles telling us the creases that have to be ironed out.
And eventually, Lata, IDFC's holding will have to reduce in the consolidated entity?
Yeah, but that is in the very low. I mean, they have enough time for that. A bank always has to raise capital. I mean, you're seeing it in all banks. Growth, it comes through raising capital. And therefore, there is a lot of time for that. Once the entity merges, they will be raising capital at regular intervals like any other bank. I don't think that is an immediate worry. The immediate worry will only be that minor 1.5 or 2% that they may have to sell, that they may have to buy.
Okay. All right, Lata. Thanks very much for that. So that's the exclusive news which is coming in on IDFC Bank as well as Capital First with regards to the shareholding pattern and the holding company structure of IDFC as well. But as of now, we have Mitesh Thakkar joining in to revisit what is turning out to be a very strong day for the markets. Well, Mitesh, afternoon, over to you then. 10,774 currently for the Nifty. What are you recommending? Are you going long? Which are the stocks? And what might your target and stop loss be as well?
Good afternoon, Ekta. So we've been long, but on the Nifty now I'm not advocating any fresh positions, but the Bank Nifty is more interesting. It has just made a fresh high, getting past the earlier highs of 25,950. So once it broke above that, I think we've recommended buying into the Bank Nifty with a stop at 25,900, and the target should be close to about 26,250. On the stock side, I have two recommendations on the buy side. Dabur is a buy with a stop at 357 for targets of 375, and Equitas is a buy with a stop at 161 and target of 173.
So 84 points on the Nifty, and the move in HDFC is a real blowout one. The price is 1871. It's up 6.25%. That's 110 rupees plus again, and basically yes, the day's high. What a move! We of course played out the soundbite that we from the interview that we had with Keki Mistry earlier in the day, and maybe we'll put out some more details in terms of what brokers are saying. But that is really the one stock to keep your eyes on. Let's get some Twitter queries addressed now. Mitesh, of course, ran us through his trading ideas. And let's get some queries answered. Vimlesh has 200 shares of Mahanagar Gas, which he bought at 1,014 rupees. Wants to know if he should add more or not. The stock's at about, what, 1,100 or so. Mitesh, what would you tell him?
So, see, MGL hasn't been doing much in the last 4 to 6 weeks. It's turned sideways. The base is around 1,060. So, first, trail your stop loss to 1,060. The upper end of the range is at about 1,135, 1,140. Try to take profits over there if you're a short-term investor. Or you can take a fresh opinion, because there is a chance that if it breaks 1,140, it can head towards 1,200.
Okay, now we have another one. Bridge Sharma, 700 shares of Aban Offshore, which is bought at 271. Wants to know long-term view on the stock and whether he should hold or sell.
See, Aban, I think in the last about 2 to 3 sessions has done very well. Appears to have started some kind of an uptrend. It might consolidate for next few days after going up by 50 points in the last 4 days. But my sense is that it's heading towards targets of 320 plus if he holds it for a few weeks. So my advice is to maintain the position for next about 4 to 5 weeks. I think 320 plus levels can happen soon.
Okay. All right. Fair enough, Mitesh. We're going to let you go on that note. Thanks very much for joining in and speaking to us. So that's the view coming in on the technicals of the market. We've been pointing out how there are some stocks which are really zooming away today, and that has to be Muthoot Capital, which is really surging on the back of what was a strong set of numbers this quarter. We spoke to the COO of the company about their assets under management growth, and this is what they had to say. You can see that the stock, in fact, is now up around 16.5%.
We expect to be around 2,000 crore as we close this financial year. We had been growing about 50-55% month on month and year on year basis. We'll continue this growth till 2020. 2020 is where we have said that we'll double the book from where we are currently, and we are very hopeful of delivering this particular number that we are seeing.
Kumar, Head of Institutional Broking and Global Economy at Elara Capital, joins in to discuss the fundamentals of the market. Harindra, hi. Thanks very much for taking the time out today. Well, you join us on a day when the markets are at record highs. What's your prognosis for what the year might turn out to be based on the start of it?
We've been actually very bullish all throughout since the market hit an intermediate bottom at 6,800. I think the trend continues. In fact, the trend has just got stronger, given that the dollar depreciation is just about gaining strength, and that has tremendous tailwinds for emerging market currencies and emerging markets overall. So I think apart from the valuations that we keep actually discussing about, one has to actually refocus on where the dollar is moving and how emerging markets will do. I think India is very well positioned in terms of the emerging market outperformance given our growth outlook. So as of now, I think it's not a market that you sell into. In fact, you go out and cherry pick on ideas that you want to be invested in for the next 24 months.
Fair enough. So actually, my question was exactly about that time period, next 2 years, right? I mean, if so, somebody wanted to put money in for the next 2 years, which is not very long, which is not really short term as well. What should one be doing?
So fundamentally, Prashant, what has happened is, actually the character of the bull market is actually undergoing a small change. We've seen the rate cut cycle actually ending, and you might see a small rate hike as well this current financial year. But what essentially it means, if you look at the IIP print as well, that we're moving away from a recession-led policy to actually a growth-led policy. And coupled with global dynamics, I think we are actually in good hands. So we would actually go out and change our portfolio allocation per se to realign with this new dynamic. So you would have some amount of metals which have global tailwinds plus the local economy recovering. You would have consumption which is actually going to take off given the rural impetus, and you would have telecom and some of the other economy-led sectors. So the character needs to be identified and you need to play it accordingly. So there is a top-down angle as well as bottom-up, actually if you need to outperform over the next 24 months.
Narendra, the other sector which seems to be doing very well today is the entire financial space. NBFCs such as HDFC, obviously Capital First, and obviously banks as well such as ICICI Bank. Based on your thesis about growth and the impetus that we could see, would you be a buyer of financials and maybe even PSUs?
Absolutely. I think financials will be the torchbearer of the rally. You had Mr. Kotak speaking about the market share of private banks moving from 30% to 50%. Some of the larger players will get larger. You had initial signs of capex revival in Mr. Sopti's comments on the IndusInd results. And you have recaps of bonds and the way in terms of the NCLT recovery is happening. These are good tidings for PSU banks as well. So my bet currently will be that you need to be market aligned to private banks. But if you need to create alpha, you need to be somewhere in the top 3 PSUs, say SBI, Bob, and some of the smaller names. And that is where you will see a big delta in terms of growth or stock price performance.
Harindra, you said metals, right? A global tailwind, etc. Is there a sense that, I mean, global growth last year was basically the best since the global financial crisis of 2008. Is it, according to you, is it possible that global growth hits a peak and then kind of trails off? So basically growth peaks this year, sometime in 2018. And if that were to happen, there'll be indications and markets would sense that out ahead of time. So what does that mean then?
Yeah, Prashant, your outlook is correct actually. The global growth will peak this year, but it will hold in subsequent years. That itself in the base that it has is good for emerging markets. I think the bigger trade is the euro's outperformance vis-a-vis the dollars, which is actually weighing on the dollar. So, India will have the tailwinds of commodity rally. Even the gold is shaping up pretty much well. And you're seeing that reflection in crude as well. Typically, when you had this dynamic moving, emerging markets have done very, very well. So global growth will remain, they will provide the tailwinds. But emerging markets vis-a-vis, because of this construct, will tend to outperform the rest of the world. I think that is very amazing. So I would not be conservative in calling a huge amount of flows as well moving into the country and the rupee continuing its upward appreciation bias.
Harindra, thanks very much. We are out of time. Would have loved to take this a couple of points forward, but we'll do that next time. Thank you for joining us this morning. Market's still pretty strong. There is no real shake-up at all. It's 82, 83 points on the Nifty. This flash at the bottom of the screen, and this is basically coming in for TCS, close on the heels of its largest ever order win, which happened last week along with the results. Marks & Spencer selected the company as a principal technology partner. We don't know the size of the order or anything of that nature at this point. Let's move on. The government wants to rope in global consultants to fast-track the implementation of its ambitious Bharatmala project for the road and highway sector specifically. Ashpreet tracks the sector. She's getting us the story and she's standing by. Ashpreet.
Well, yes, absolutely. At this point of time, the government doesn't want to leave any stone unturned. In fact, they're looking at global expertise to guide them as far as the whole Bharatmala project is concerned. Remember, by 2022, the government is looking at constructing about 34,800 kilometers of highway, new roadways and even ports. Now, that will cost about 5.35 lakh crore. Now, the government is looking at raising this money through the bond market, but as far as the global expertise aspect is concerned, we've picked up that 5 bids have come in. The tender has already been floated, and McKinsey and A.T. Kearney are the front runners as far as guiding the government on the Bharatmala project is concerned. We'll have to wait and see, but what we do pick up from sources is that within a day or two, the evaluation will be completed and the final decision will be taken. Back to you.
Okay, all right, Ashpreet. Thanks very much for that. So that is some information coming in with regards to the Bharatmala project. That's all the time that we have on Trade.